ever since the Russian invasion and then the subsequent freezing of their reserves. That's certainly given global central banks more of a friction around the dollar and the treasury and pointed them more toward either diversify their fiat exchange reserves or hold more neutral reserve assets. Gold is their kind of go-to initial choice. So we've seen a lot of gold buying among central banks. But then some of the more forward-thinking ones can then say, well, is it just gold we should be looking at, or are there maybe Bitcoin, maybe other assets? As a neutral reserve asset that protects seizure, it's also potentially useful for payments. Like when Russia's scrambling to say, okay, well, how are we going to make payments if we're sanctioned, and what ledger can we agree to some other trading partner to use with us? Like a leading open source ledger is like part of the discussion. Now it's probably still too small and volatile, but it's at least entering the picture as, hey, we want to not only secure value, but be able to transfer value to trade partners should we need to.
The Trump administration is undoubtedly meeting expectations in fulfilling many of the president's campaign promises to Bitcoin and crypto investors. Under his leadership, there has been a much-needed reshuffling of regulatory agencies like the U.S. Securities and Exchange Commission and the Commodity Futures Trading Commission. Additionally, Trump has appointed several pro-crypto and pro-innovation individuals, alongside policies aimed at fostering the growth of the crypto industry both domestically and globally. Following Trump's announcement of a U.S. Bitcoin strategic reserve, other countries, including the Czech Republic, Switzerland, Russia, and Japan, have proposed similar initiatives for their own national reserves. In the Czech Republic, Governor Aleš Mikl of the Czech National Bank has proposed diversifying the bank's reserves by investing in Bitcoin, planning to allocate up to 1% of the bank's €140 billion reserves into the cryptocurrency, despite its volatility. Switzerland is considering a constitutional amendment that would require its national bank to hold a portion of its reserves in Bitcoin. In Russia, State Duma member Anton Tkachev has suggested creating a strategic Bitcoin reserve, arguing that it could serve as a hedge against sanctions and currency volatility. Similarly, in Japan, lawmaker Satoshi Hamada has advocated for a national Bitcoin reserve to diversify assets and hedge against economic uncertainty. In a recent interview on the Bankless podcast, macro analyst and investment strategist Alden discussed the rise of this new era for Bitcoin. He believes that President Trump's pro-crypto stance, combined with the actions of leaders like Michael Saylor, will pave the way for more countries, corporations, and other large entities to confidently hold Bitcoin in their reserves and balance sheet. Alden also explored how these policies could significantly impact both the U.S. and global economies in the long term.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
That's kind of an extension of fiscal dominance, is to say that basically those that are running fiscal matter a big deal. In addition, they have a variety of other things like tariffs that, while that is technically part of fiscal policy, it touches other parts of the economy as well. And so I still think it's the case that generally speaking, Fed-related stuff is not like the number one thing. It doesn't mean it's not a variable, but anything kind of monetary related is a little bit in the backseat compared to fiscal. And another way of thinking about this is that we're at a potential pivot point because we've had almost 2 years of fairly similar macro environment, which was Fed's tightening, they're draining liquidity, and the Treasury is putting liquidity back in. They're running very big deficits, but then they've also shortened the average duration of their debt. Or more specifically, it's correct to say that they've issued extra T-bills, which are their most cash-like debt instrument that they have, that has sucked extra money out of the reverse repo facility. It's kind of like taking excess QE from a couple years ago and putting it back into the market while the Fed's doing quantitative tightening. As you've had that kind of offset, I would say that dynamic began in like early 2023, and it's really been in place ever since. And we're getting toward the end of certain trend points, which is to say that there's not much money left in the reverse repo facility. So we might have more of a shakeup between the Treasury and the Fed. And in addition, we have the executive branch that is obviously newly elected and coming in hot with a bunch of policies that are quite different than the prior administration. So there's certainly a lot more balls up in the air here to juggle as we kind of see what's going to happen. And I think the further we get in, maybe that effect diminishes. Generally speaking, the first 100 days of a presidency are a really big deal. In addition, the first 2 years before the midterms, they want to get any kind of disruptive stuff probably out of the way early on, or anything that they need their full majority to do. They probably want to get that passed. We don't know how it's way too early to say what's going to happen at the midterms. So the dynamic could become different there. So certainly in the first 100 days and then the first 2 years, it's interesting. In addition, what's different than his prior presidencies, so his last presidency, he came in, he probably didn't even expect to win back then. It was a surprise to a lot of people, potentially including himself, that he won. He has his team that's some of his own people, but also he had like a lot of you can say more establishment types in his administration. And then that administration was kind of characterized by chaos, which is a lot of people leaving, kind of going through, like churning through a lot of these types of people where there wasn't a lot of alignment between them and Trump. And what's different this time is that they played to win, they won. The team is kind of more aligned this time. Instead of having like kind of establishment and non-establishment, it's a lot more anti-establishment thinking, and they've clearly planned during the transition time to hit the ground running early. So I wouldn't necessarily say that this pace is what we would expect throughout the administration, but it's certainly starting out a really big factor, given that we're already in a fiscally dominant environment. And I think what further amplifies it is that some of the trends that they're at least trying to tackle are structural. And so I've highlighted before that, for example, the trade deficits are structural. These have built up for decades, and they have very entrenched reasons to exist. And they are causing a lot of issues. This is something I've been, writing about for probably 5 years now, is the structural trade deficit situation. And so the fact that they're trying to tackle them is kind of a historic moment. And the same thing with fiscal deficits. So we can probably get into some of that, but I would say that the early period here, I wouldn't necessarily extrapolate for 4 years, other than obviously Trump's a showman. The first term had a lot going on, and we probably should expect similar. The funny thing is, what he wants to do with the dollar is probably the most confusing thing, because his own statements are back and forth on that, and sometimes his views conflict with outcomes. The clearest thing we can say he wants is that he wants to reduce the trade deficit. He wants to bring more manufacturing back home, and he's willing to use fairly aggressive tactics to try to make that happen. It remains to be seen how effective it's going to be, but it's clearly the biggest attempt we've seen by the administration to even care or focus on the trade deficit. For a little bit of background, the way that the trade deficit works in the U.S. is different than most other countries. So most countries, their currency trades mainly on fundamentals of things like interest rate differentials or the trade balance. If some currency gets quite weak, it makes making things very competitive there, and it hurts their ability to import. And so in addition to interest rate changes, they generally work itself out. They kind of hits an equilibrium, and then manufacturing comes back to it, and they slow down their imports, and then they kind of right size it out. The U.S. is interesting because, unlike most other currencies, we have an extra monetary premium on top of ours. There are countries all around the world that hold dollar-denominated assets just to store value in, which means that we have this kind of persistent extra demand. It's kind of like how if gold was priced only on its utility aspects, it'd be way cheaper than the fact that tons of people just hold gold as the best like analog money. And it's kind of like that for the dollar. It's the most monetized fiat currency by far. And what that does, that kind of makes it structurally overvalued on a trade basis. So we generally always have greater import power than we probably should, and we have generally less competitiveness on lower margin export things. We're still good in technology, healthcare, finance, but anything kind of low margin or physical, that's where we have more trouble than even other developed countries that can be fairly expensive to make things in. And so we have this kind of structural trade deficit. What makes it so challenging is that if we want to have the world reserve currency, which gives us, the power to the government has the power to kind of issue probably more debt and deficit than they would. Like right now, Brazil's having a fiscal issue, and it's not because their deficits are bigger than the U.S. on a relative basis. It's because they're fairly large, but there's not a big global appetite for Brazilian bonds and currency and assets. Whereas the U.S., because there is this big appetite for it, they have a lot more rope, a lot more runway to work with. So they like that. They also like the ability to sanction any country in the world in practical effect. But the trade-off with that whole approach is that we have to supply the world with dollars if they're all going to use dollars for contracts and holding assets and things like that. And the way we supply it is a structural trade deficit. So being the reserve currency causes the trade deficit, and then also the trade deficit is necessary to kind of permanently maintain that status. But then the tricky thing is it's not a stable equilibrium. If you run decade after decade of trade deficit, you hollow out your industrial base and you get major winners and major losers. So if you live around DC, if you live around New York, if you live around Silicon Valley, you're doing pretty good. If you work in certain fields, you're doing great. You're not harmed at all by this, and you're on the right side of everything. On the other hand, like you point out, if you're in the Midwest, if you're in the Rust Belt areas, historically the manufacturing areas, that's who's been on the wrong side of most of this trade. And so there's an attempt here to try to right size some of that balance. My takeaway would be that it's going to take more sacrifices than probably most of the bulls expect, which is to say that the number of things we have to do to actually bring back a meaningful amount of trade, not just like some optical wins, but like actually like meaningfully reduce the trade deficit, probably has a lot more disruptions to global finance than we think. And it's not like this like simple thing we can just do. Like right now, the manufacturer's not there for a reason. And when we start changing the reasons, it does open a can of worms that is probably worth opening, but it's still a can of worms. And I think that's probably what we're going to start to see playing out.
In a bold effort to reshape international trade and protect American industry, President Donald Trump has imposed a 25% tariff on all steel and aluminum imports. Speaking from the White House on Monday, Trump emphasized that U.S. manufacturers have long been hurt by both allies and adversaries, asserting that American-made steel and aluminum are vital for the nation's future. Our country needs steel and aluminum to be produced in America, not overseas. We must create to protect our future, he declared while signing an executive order that removes several country and product-specific exemptions from his earlier tariffs. Trump's decision, which applies universally with no exceptions, aims to boost domestic production and rejuvenate American industries. This is a big deal. It's the beginning of making America rich again, he stated, marking the tariffs as the first step in what he envisions as a broader effort to bring key industries back to the U.S. According to the U.S. International Trade Administration, Canada is the largest supplier of steel to the U.S., followed by Mexico, Brazil, South Korea, Germany, and Japan. In the aluminum sector, Canada again leads with significant imports from the United Arab Emirates, South Korea, and China. The new tariffs have prompted immediate backlash, particularly in Canada. Mark Carney, a prominent figure expected to lead the Liberal Party, urged restraint on social media, stating, "Trump wants us to lose our cool, but we need to stay united with the right response." He suggested that, in the short term, Canada should consider implementing dollar-for-dollar tariffs and increase support for its critical steel and aluminum sectors. Despite the expected retaliatory tariffs, some experts believe these moves will ultimately benefit the U.S. economy in the long term. Now, let's return to Alden's interview as she discusses the growing trend of countries and corporations using Bitcoin as a reserve asset.
Ever since the Russian invasion and then the subsequent freezing of their reserves, that's certainly given global central banks more of a friction around the dollar and the treasury, and pointed them more toward either diversify their fiat exchange reserves or hold more neutral reserve assets. Gold is their kind of go-to initial choice. So we've seen a lot of gold buying among central banks. But then some of the more forward-thinking ones can then say, well, is it just gold we should be looking at, or are there maybe Bitcoin, maybe other assets? Now, when Bitcoin is like sub 2 trillion market cap and quite volatile, there's generally a lot of career risk in some of these proposals. So it takes kind of a pretty forward-looking person to kind of take that risk. So in MicroStrategy, in their case, it was the founder still running the company at the time.
Right.
Now he's chairman, but he was CEO at the time, and so he could kind of run that almost like a small business despite being publicly traded.
In line with President Trump's campaign promise, the United States is actively considering the creation of a strategic Bitcoin reserve. Last month, President Trump signed an executive order titled Strengthening American Leadership in Digital Financial Technology, which, among other directives, proposes the evaluation of establishing a national digital asset stockpile sourced from lawfully seized cryptocurrencies. This initiative builds on previous legislative efforts, notably the bill introduced by Senator Cynthia Lummis in July 2024. Her proposal advocates for the U.S. Treasury to acquire 200,000 bitcoins annually over a 5-year period, ultimately amassing a total reserve of 1 million bitcoins, around 5% of the total bitcoin supply. The plan suggests funding these purchases through profits from Federal Reserve Bank deposits and gold holdings. Additionally, 19 U.S. states have introduced or passed legislation to create their own Bitcoin strategic reserves, signaling growing interest in integrating Bitcoin into governmental financial strategies at both the federal and state levels. While these developments indicate a notable shift towards recognizing Bitcoin as a key national asset, the proposals are still under review, and no final decisions have been made. Do you agree with Lyn's view that this marks the beginning of a new era for Bitcoin and the broader cryptocurrency industry? We'd love to hear your thoughts and comments in the section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.